Hello students, today I will discuss with you the topic of aggregation of income under the Income Tax Act 1961. Under this lecture, I will cover the topic of incomes of other persons to be included into the income of the transferor under section 60 to section 63. Second portion of the lecture will cover income from other persons to be included into the incomes of individuals. And the last portion of the lecture will be covered deemed incomes under section 68 and 69. So let's start with the topic of aggregation of income or clubbing of income. A person is liable to pay tax only the income earned by the individual, the person in the relevant previous year. Generally, the person is paying the tax on the income which is belongs to the particular person, but however, under the Income Tax Act 1961, there are some cases, some provisions in which the income of one person is to be included into the total income of the other persons. So, to avoid the tax evasion, to avoid the tax evasion practices, these certain anti-evasion provisions has been incorporated under the Income Tax Act 1961. So, we will discuss the cases, the provisions in which the income of the other person will be included into the income of the assessee at the time of calculation of the tax liability. So, under this first portion of incomes we will discuss, that will be the incomes of other persons to be included into the assessee's total income. Under this first one is transfer of income where there is no transfer of asset under section 60 of the Income Tax Act. So in this case, when there is a transfer of income but there is no transfer of asset, means without transferring any asset, assessee is going to transfer or transferred some income to any other person, to his relative or to any other person who is related to the assessee, then that income will be treated as the assessee's income. For example, Mr. Lokesh owns the house property from which he earns rental income amounted to rupees 20,000. Now suppose Mr. Lokesh transfers the rental income to his wife by directing the tenant to pay the rent directly to her or by otherwise. But in this case, according to the provisions of the Income Tax Act, the rental income which is transferred to the Lokesh's wife, that will not be treated as the income of Lokesh's wife, rather it will be included into the income of Mr. Lokesh at the time of calculation of the tax liability. Next case, that is the revocable transfer of asset. In any case, when the asset is transferred to the person, if that asset is of the revocable nature, then the transferred asset will be included into the total income of the assessee. If the asset is not revocable in nature, then that will not be included into the aggregation total income of the assessee at the time of calculation of the tax. Now the question arises, what is the revocable of transfer? So here transfer shall be deemed to be revocable if it contains any provision of retransfer directly or indirectly by the transferee, by the transferor during the lifetime of the transferee. Means if the transferor has retained any right to retransfer the asset, then that transfer will be treated as a revocable transfer of any and it in any way gives the transfer right to resume the right on the asset, then that will be treated as the revocable transfer. Or transfer includes any settlement, trust, agreement, or specified revocable transfer excludes the provisions of the under section 61, means if they transferred is by the way of trust which is not revocable during the lifetime of the beneficiary. In the above cases, the amount will be transferred value of the asset will be included into the total income of the assessee at the time of calculation of tax. But in this specified revocable transfers, if the transfer is through the trust and it will not be revocable during the lifetime of the trust, then it will be treated as the transferred. And if transfer is otherwise by the way of trust and is not revocable during the lifetime of the transferee, then in that case also it will not be treated as the part of the assessee's income. If the transfer is made before the first day of 1961, when the act was not applicable, which is not revocable for the period exceeding 6 years, then it will not be treated as the asset of the assessee. For example, Mr. X transfers the property to Mr. Y, which shall not be revoked during the lifetime of Mr. Y. So, any income transferred house property from such transferred house property shall be treated as the income of Mr. Y during the lifetime. Now, the next point comes to us, that is the any salary, commission, or any other remuneration received by spouse from a concern in which other spouse has the substantial interest, then that will be also treated as the part of the assessee's income. Now, the what is the substantial interest? In case of company, the person having at least 20% of the voting right in the equity shares, and in the other cases, the person is entitled to at least 20% of the voting right of the concern. Exception to the clubbing, if the income derived by the employee's wife is due to his her knowledge or technical qualification, then it will not be treated as the income of the assessee and that will not be clubbed into the income of the assessee. If both spouse hold the substantial interest in the same concern, then that in such a case the income of spouse shall be clubbed with the income of the spouse having the higher income. Next, fourth point comes to us, that is income from asset transferred to spouse without adequate consideration. If any asset is transferred by the assessee to his or her wife, her spouse, then in that case, if the asset is not transferred or asset is transferred but the consideration is not adequate, that is inadequate consideration, then that income, the income derived from that particular asset, will be included into the income of the assessee. For example, Mr. Shiv transfers debentures of ABC Limited worth rupees 50,000 to his wife out of the natural love and affection without adequate consideration. Now Mr. Shiv has transferred debentures worth rupees 50,000 to his wife, and there is no adequate consideration is received by Mr. Shiv. Now the interest on such debentures accrued to the wife shall be included into the total income of Mr. Shiv, not to the Shiv's wife. Next comes to us income from assets transferred to son's wife without adequate consideration. Now, for example, a person has transferred any asset or transferred the right of receiving the interest, right of receiving the income from any asset to the son's wife without adequate consideration. That income will also be included into the total income of the assessee or of the transferor. For example, Mr. Daulatram transferred investments worth rupees 50,000 to his daughter-in-law Lakshmi without adequate consideration. Now, Mr. Daulatram has transferred the investment worth rupees 50,000 to his daughter-in-law without adequate consideration. In this case, The income received from such investment by Lakshmi will be clubbed into the total income of Mr. Dolatram. Means the tax liability will be fulfilled by Mr. Dolatram, not by the daughter-in-law of Dolatram. Next comes to us asset transferred for the benefit of spouse. Yes, in this case, if any asset is transferred by the assessee for the benefit of the spouse under section 64, subsection 1, clause 7th, so in that case, the income from that particular asset will be included, will be clubbed into the income of the transferor or income of the assessee. For example, Mr. Krishna transferred his house to his friend Mr. Ashok with the direction that rental income from the house will be used for the benefit of Krishna's wife. Now, such rental income shall be included into the total income of Mr. Krishna at the time of calculation of tax liability. Next point comes to us income from asset transferred to the person for the benefit of son's wife. As we have discussed in the last slide, that if any person has transferred any income or any asset to his or her daughter-in-law for the benefit of the son's wife, for the benefit of the daughter-in-law, then that income will also be included into the total income of the transfer. Income of the minor person under section 64 subsection 1 clause A. Under this, any income generated, any income of the minor shall be clubbed with the income of that parent whose other income is higher or is income of that parent who maintains such minor child. Means the income earned by the minor child will be included into the income who is maintaining, who is bearing the expenses of the minor child, or the if the any person is not bearing the any expenses of the minor child, then the income will be the income of minor child will be included into the parent whose income is higher. Then but in this provision of clubbing, the provision of clubbing would not be applicable when the income of the minor arises due to his manual work done by the minor child or activity involving application of his skills, knowledge, talent, specified knowledge and experience, or the income of the minor child who is suffering from any disability specified under section 80U. Now the question is, if the minor child is a singer and singing any song, and by singing the song he earns rupees 2 lakh, then that income will not be included into the income of parents, because that income is earned because of the talent of the minor child. Next point comes to us transfer of individual self-acquired property to the HUF for which he is a member. Now, where an individual converts his individual or self-acquired property into the common pool of HUF, Hindu undivided family, of which he is a member after 31st December 1969, the income from such asset, a converted property, shall be treated as under. The individual shall be deemed to have the transferred converted property through the family or to the members of the family for being held by them jointly, or the income derived from the converted property shall be the deemed income of the individual, not of the family. That income will be included into the individual's income. Next comes to us the clubbing of negative income. Yes, clubbing of negative income will also be treated. Negative income means loss. So income also rises loss, also includes loss. If the transferee suffers a loss in the above mentioned cases, then the loss shall also be clubbed with the total income of the transfer. or any liability of the transferee to pay tax in respect of income club in the hands of the transferor. Yes, if is there any liability, in such a case, transferee shall be liable to pay that portion of tax levied on the assessee which is attributable to the club of income. Means that any loss or any liability regarding the tax will also be adjusted from the total income of the assessee. Now comes to us the next portion of the lecture, that is the deemed incomes. Yes, what is the deemed income? The income which is deemed to be accrued by the assessee and will be included into the total income of the assessee at the time of calculation of taxes. So under this, first point comes to us cash credit. Under section 68, cash credit is if there is any sum is found into the credited of in the books of the assessee maintained in the previous year, and the assessee is unable to give any satisfactory explanation regarding the nature and source of the cash credit which is credited into the account of the assessee in the last previous year, then that cash credit will be treated as the income of the assessee in that particular year. So that will be included into the total income of the assessee. Unexplained investment under section 69, if in any financial year preceding the assessment year the assessee has made any investment which is not recorded into the books properly, or which is not recorded, totally not recorded into the books, and assessee is unable to give the explanation regarding the source of income, yeah, or the source of finance from which this investment was made, then that unexplained investment will also be included into the total income of the assessee. Unexplained money, section 69 subsection A, any unexplained money in any money or jewelry or any other valuable article found unrecorded in the books of the assessee, that value will also be included into the total income of the assessee. Account of investment not fully disclosed in the books of accounts. If there is any account of investment which is not fully disclosed in the books of account, which is not shown in the books of account, that will also be included to the total income of the assessee. Unexplained expenditure. Yes, unexplained expenditure is such expenditure that is incurred in any financial year and assessee unable to give any proper explanation regarding the source of such expenditure. Means the assessee has incurred any expenditure, say rupees 5 lakh, but he is unable to give the explanation regarding the source of that 5 lakh, then that will be included under the category of unexplained expenditure, and on that expenditure the tax liability will be calculated, that will be included into the total tax liability of the assessee. So amount of unexplained expenditure which is deemed as income of the assessee and shall not be allowed to be deducted under any head of the income. So, in this lecture, we have covered the incomes of other persons to be included into the income of transfer, and the other incomes to be included into the individual's income. And we have also discussed the any loss that can be adjusted from the total income. Last, we have discussed the deemed incomes. Thank you.